All right, how's it going, everybody? This is Cameron Kaiser, and I am going to be sharing with you guys today my deep in the money long calls and puts options trading strategy using ThinkorSwim. This is something I've been getting a lot of questions about recently, so I thought I'd just make a tutorial video on how I'm trading options and what I'm doing, how to set it up using ThinkorSwim. All right. So if you're not using ThinkorSwim, I'm sorry. I don't know if this video will be relevant to you. You could certainly still trade in this manner, but the setup might be a little different for whatever platform you are using. All right. So what is my strategy here and why am I using deep in the money long calls and puts? Well, really the purpose is just to trade core strategy efficiently. All right. So the stock market provides a fertile ground of opportunities. Ultimately, what we're doing in core strategy is just trading trends. So, our challenge as futures traders or Forex traders is that we have a small basket of goods to work with. And so, we have to kind of go hunting around in different time frames to find the trends that we're interested in trading. The beautiful thing about the stock market is that there is a large basket of goods to trade. And rather than sifting through those stocks manually, we can actually scan the entire market to meet certain criteria, such as trend, such as liquidity, things of that nature. So if I'm interested in just trading trends, the stock market's a great place to do it. And if I want to be capital efficient, well, I'm going to hop into the options market and use options as a substitute for stock so I can basically just trade these simple directional trades, but just use options as a way to be more capital efficient. All right. So this is why I'm using the high delta, the deep in the money long calls and puts, because I am just interested in a purely directional play. All right. So another beautiful thing about this is that it really simplifies things. It simplifies our options trading. I know that I'm just doing long calls and long puts. I'm going to have an entry, I'm going to have a stop loss, and I'm going to have a target. The same way that I would be trading stock, I'm just using options as a result. All right. So if I'm going to do this, I actually have to have a way to, have some parameters for what I'm trading because the options market is a different market. In general, it's not as liquid as, the underlying stocks itself. So what I need to do first and foremost is that if I'm going to take this purely directional play, I need at least 70 delta at entry. All right. So the purpose of this is really to mitigate, how much extrinsic value is eating away at our options premium, at the price of our option. All right. And so the higher delta we go, the more intrinsic value we have, the more directional value that we have on that option. And we're going to have less exposure to things like volatility and time decay and things of that nature. Another thing that we're going to want to do is actually trade options that are 1 to 4 weeks out until expiration. All right, this is kind of in contrast to the way we teach options generally at Online Trading Academy because we don't want to experience that accelerated time decay, which we would experience in those 1 to 4 week out expirations. However, the closer we get till expiration, the more options volume we tend to see per contract. So if we're looking to trade just a purely directional play like a 70 plus delta and we're looking to be 90 plus days out, chances are there's not going to be great liquidity on that option since there tends to be more options volume traded at the money. So But if we combine these two characteristics, that the closer we get till expiration date, the more volume in general we experience in the options chain, then we can make the assumption that our 70 plus deltas will actually have tighter spreads closer to expiration. And if we're using high delta options, well, we are actually hedging against that accelerated time decay at that point. But if we're going to trade like this, we actually need to be in and out of the market in a relatively short amount of time, because we are still going to experience time decay, but we just want to capture that purely directional move and not be sitting in the market all too long. So what I've had success with here are a couple different time frames. Is that I've been using daily high time frames, 1 hour intermediate time frames, and 15-minute low time frames for my entries, as well as weekly high time frames, daily intermediate time frames, and 1 hour or 65-minute actually charts for my low time frame or entry time frame in these markets as well. All right, because if I have 15-minute entries, chances are I'm going to be in and out of that trade in anywhere from like 1 to 3 days, I would say. And then if I have a 1 hour entry, I'm going to be in and out of that trade maybe 1 week, anywhere from 3 to 10 days, I would say, in that. I've actually, the longest trade I've been in, I think, was 8 days on a 1 hour chart. So typically speaking, if we're using those 15-minute load time frames, I'm looking for 1 to 2 weeks out till expiration. If I'm looking to take an entry on a 1 hour chart, I'm looking for 3 to 4 weeks out until expiration, and that should give me enough time to get in and out of that market. Another benefit of using these shorter expiration dates is that the options are going to be a lot cheaper. We can be more capital efficient. They're not going to be as inexpensive as those 90 plus days out, but we do need to kind of meet the right parameters. So this is what's been working for me. Feel free to use that same thing or play around with your own timeframes as well. All right, so the steps. What are the steps? Well, first and foremost, we have to create a scan. And so we can do this right in ThinkorSwim. What we're going to be doing is scanning for quality stocks with liquid options markets that are trending on a certain time frame. And that's all possible in ThinkorSwim. So we scan the markets and then we flip through whatever the scan has produced for us and we look at the trends. We say, hey, is this a good trend? If it is, do our back analysis from there. All right, so we got to chart things, find our opportunities. The scan is going to do most of the heavy lifting for us, and most of the opportunities are going to kind of pop out right at us, which is great. Then we actually have to go into the options chain and analyze an options contract that we are interested in. All right, so chances are we're going to be analyzing something that's higher than 70 delta, because we're going to realize that as that opportunity is coming closer to us, the delta is actually going to decrease. So we want at least 70 delta at entry, but we're going to analyze that option to show us our risk to reward ratio and how many options we're able to buy based on our risk parameters. Then, of course, we are going to set up the trade. In ThinkorSwim, there are fantastic conditional orders. What I'm doing is I'm setting up things typically the night before, and so what I have to worry about is gap risk, right? And so in ThinkorSwim, I can actually add in parameters that will cancel my trade if the market gaps over my zone, and that happens actually quite a bit. So I want to make sure I'm not getting filled on things that the market is gapping over. All right, and so using ThinkorSwim, there are really fantastic order parameters. We can set up an entry, stop loss, and target all at once, and some cancel conditions based on market conditions to cancel that trade if the market conditions change. And I can kind of walk away from my trade at that point with a good degree of confidence that I'm not going to get got by some craziness in the market. All right. So then finally, we will journal our trades, of course. I've created a spreadsheet for all of this. In the description of this video, I will leave the links to the ThinkorSwim Scan setups. as well as a link to the journaling template if you guys are interested in using that stuff. All right, for right now, I'm actually going to walk you guys through the scan setup. The first thing in ThinkorSwim here. All right, so let's open up ThinkorSwim. I have it open here. And then what I'm going to want to do is actually go up to the scan tab at the top. All right, so you see here that I actually already have a scan built out at this point. I'm going to delete everything here and just walk you through what this would look like. All right, so it doesn't matter if you're in the stock hacker or options hacker. Both of them are the same as far as I'm concerned. And then what we can do here is we need to add in some filters. So the first filter I'm going to add in is a stock filter. I'm going to change that from ask to last. I want to just trade options on stocks that are over $10. All right. So under $10, I mean, that's just trade the stock. All right. So $10, a minimum price, no max price. I'm going to add in another filter here now. The next filter I'm going to add in here is going to be a study. I'm going to add in a study for average volume. So if I hit that drop down, go down to volume, hit average volume. I want the 50 period simple moving average to be greater than 1 million shares traded per day. All right. So what I'm doing at this point is I'm just filtering for stocks that are above $10 that have good liquidity, quite frankly, and that there's institutional activity, because that's really what we're looking for. So an average of 1 million shares per day should do us pretty good at that point. All right. The next thing I'm going to do is add a filter, add an options filter. And what I'm going to do is change that to open interest. I'm sorry. So change that down to open interest. And what open interest is just outstanding contracts on that ticker symbol. All right. So on that stock, the outstanding options contracts that are out there, the higher open interest, typically the more activity we see in that options chain, which means that we're going to get tighter spreads. So I want at least 10,000 outstanding contracts on that market, no max. All right. Then the next thing I'm going to do is add a filter. I'm going to do option again. I'm going to change that from bid. I'm going to go all the way down to volume. And now I'm going to change this to 5,000 options contracts traded in this day. All right. So if you're doing this intraday, you may want to play around with the volume, because chances are you won't hit that 5,000 on options contract traded per day right early in the morning or anything like that. I typically do most of my setups at night, so this is the parameters I've came up with. All right. And then the last thing I'm going to do is add a filter, and it's going to be another study. Now what we're going to do here is change this study, go down to popular studies, go over to RSI scan, and then we're going to change this from a 14 is good, Wilders is good, greater than 55. All right. And then if we are interested in daily trends, we're going to keep that on day. If you're interested in hourly trends, just change that to an hour. So what this is going to do now is that now I have a scan built that is going to scan for good quality stocks that have liquid options markets that are trending upwards on the hourly here. I'm going to actually change it back to daily here. All right. And so these are the parameters that have been working really well for me. And this is a way to cut down on our opportunity hunting time, quite frankly, in the markets. So this will give me daily uptrends of liquid options markets on good quality stocks. I hit scan, and it'll think, boom, there we go. All right, so now it's going to come up with 23 stocks. There's one actually futures contract in there because there's options on futures. Just ignore it though. that meet that criteria. So rather than running the scan every single time, I can actually save this scan as a dynamic watch list in ThinkorSwim. So if you go up into the right-hand corner here next to that little flaming sizzle index button there, if I left-click that and do Save Scan Query, name it whatever you want, save it, then it will be a dynamic watch list available to you. All right, so I'll show you how this works. So now over on my watch list tab here, let's actually go to a chart at this point. So now if I drop down my watch list and I go down to personal, it's going to have those scans saved as watch list now. So now these will be dynamic watch lists. So if I go to daily uptrends, RSI, it's going to do its thinking. It's going to run that scan, and now it's going to populate. So this scan will the symbols in this watch list will change as the criteria is met or disqualified for the symbols in this list here. So now what I can do is that I can just quickly flip through these symbols on a daily chart, and I can see if those are trends that I'm interested in trading. So if you're doing your charting on ThinkorSwim, you can do that here. I typically do my charting in TradingView over here because I just like it better. And you can actually export these watch lists and import them into TradingView if you're interested in using a different charting platform. All right. So if you go off to the right here and then you do export to file, you can save that file as a Excel file, and then you can upload that into TradingView. That's typically what I do. I'll just stay in ThinkorSwim for now. All right, so since I know these are daily uptrends, I want to make sure that my chart is on a daily time frame, right? So I go over to the daily time frame here, and then I just start flipping through the symbols, and I look for good uptrends, right? And so AMD here, pretty decent uptrend. All right, I could do some back analysis at this point. If I find a good uptrend, what I need to ask next is there curve issues? All right, if I have a good uptrend, am I going to run into overhead supply curve relatively soon, or am I in it? So you could go through it like that. Let's just find a better looking trend. Activision, kind of sideways. Comcast, really nice daily uptrend. I already did kind of a setup on it. I'm in a trade on that, so I'm not going to do that one. All right, here we go. Delta Airlines, really nice looking uptrend, right? Really nice looking daily uptrend. We had this corrective action. It looks like into demand. Potentially, there's another setup that we could try here. So now that I have this nice daily uptrend, I have to ask myself, is there an overhead supply issue? So I got to hop up to my weekly at this point, and let's mark out where the weekly supply exists. Well, we have some room. It looks like our weekly supply is way up here, right? So we have some room to run still. All right, so at this point, we're looking pretty good. We look like we could actually set up a trade on something like this. It looks like the trade probably already triggered, but let's just take a look. So I'm on my daily. Now I hop down to my hourly, or my 65-minute is actually the correct time frame to use in the stock market. And I look for that zone. And it looks like, indeed, we did hit that demand zone already. So we're not going to set up a trade on something like this. All right, so let's go back to our daily time frame again, and let's keep flipping through. Here we go. We have a nice looking uptrend on EEM here, whatever this is. And then we can do the same thing. Hop up to a weekly. All right, do we have curve issues? Yes, we do. All right, so now we're not going to trade that. So let's just find something really quick, and then we'll go through the next step of actually setting up trades. But you get the idea. You kind of just flip through things, look for the best trends. Is there a curve issue? Nope. Okay, where's the trade? Let me get it. All right, so let's just take a look here. I'll find something really quick here. Yeah, it's tough. Okay, GLD looking pretty decent. Yep. Okay. So daily, it's kind of sideways, quite frankly, but let's just do a setup on it, and so we can get to that portion of the video. I don't want to make this too long. All right. So we'll just say, this is probably more like a 2-hour uptrend or something like that. All right. So if we have this 2-hour uptrend, yeah, we're looking pretty good. Boom, boom, boom. All right. So then where is our trade at? Let's just say that we're interested in getting in long right down here on our chart. And then what we're going to do is that we'll just say we're going to target up to our curve level up there, all right? So once you have your trade built out, you have your entry, then calculate your stop loss based on ATR. I'll just estimate one here for the purpose of this video. All right. So once you have your levels built out, now you can actually go into the options market and build out a directional trade. All right. So this is a 2-hour zone. Let's go to trade tab here. And let's just say that I'm interested in options that are, 3 to 4 weeks out till expiration. Typically these monthlies tend to have really good volume on them versus the weeklies. If we get closer to expiration, then of course the weeklies are very liquid. But in this case here, we have like a 1-hour or 2-hour zone. That 25-day threshold is actually probably going to look pretty good at that point. All right, so let's go to the December 16th, and then we are interested in calls, so we're going to be on the right-hand side. And we are interested in something with a high delta, right? So if I'm going up here, is that I actually see that these 78s, they have some volume and some open interest on them. And if I look at the spread, it's pretty tight. I could also go up to these 80s. The spread is still pretty tight, about 10 cents. That's not too bad, all right? So either one of these is going to work. I'm going to use the one that has more open interest and volume just because I'll probably get a better spread, less slippage on something like this, all right? So at that high delta, I have to account for the market coming down to me. I want at least a 70 delta at entry, so I'm going to go ahead and analyze this here. So if I right-click on the ask, buy, I'm going to go down to analyze, buy trade, go all the way up to single. Once I left-click that, I'm brought over to the analyze tab here. Now what I want to do is actually enter in my price splices over down in the strike price section. All right, so stop, entry, target. Let's go put those in. I go back to my chart here. My stop loss value was 158.13. My entry value was 159.74. Let me just write this kind of stuff down quick. And then the target was going to be 169.37. Okay. All right, so then once we go have our values written down, let's go and enter those values in these price slices here. So we go to our stop value of 158.13, my entry value of 159.74, and my target value of 169.37. All right. So once I have those in here, now what I need to do is actually drop down the limit price of my option to get my PL at open close to zero, all right? Because we're not going to be paying $6.15 for this option at our entry price of $159. So if we get this close to zero, if we get this PL open close to zero, we can actually simulate the price that we're going to be paying for this option at entry, all right? So what I'm going to do here is drop that down until I'm close to zero. All right. So about here is that now it looks like I have about $100 of risk, $105 of risk, plus my 10-cent spread, so it'd be like $115 of risk, and then for a $8.26 reward. All right. You want to make sure that your delta at entry is at least 70. So it looks like we actually needed to hop up to that, that 80 delta. So what we could do here is that we could actually change the strike price at this point. Let's try the 158. Oh, I'm sorry. It's going to be lower. All right. So let's try the 156. All right. So that 156, we just have to make sure. Now we have to change the price of everything again. Okay. So you just have to make sure that that 156 has decent enough volume on it and spread. All right. So the 156 is looking really good. This 82, we have 4,000 contracts of open interest, some volume on that as well, only a 10-cent spread. That's looking fantastic. All right. So under our analyze here, now we can see, we could calculate, how many contracts we're able to get into. We have to add that 10-cent spread to our risk. So we're looking at about $125 of risk per contract. And then based on our risk parameters, we could just multiply those contracts by to hit our threshold. If I'm dealing with maybe $300 of max risk, well, I know I could buy 2 of these contracts. I typically risk $100 to $150 per trade, so I'd probably just buy 1 of these. All right. So everything's looking pretty good at this point. Now I can actually go and set up this trade. So after I analyze it and calculate my risk reward, make sure that everything is solid, then I can go and set up the trade. I go back to the trade tab here. And then I click on that option that I'm interested in buying. In this case, it's the 156. All right. And I'm going to left click on the ask. Now I have a single order built out. Is that typically it's going to default on advanced order single there. All right. And so we have a buy 1 contract. Make sure that your time in force is changed to GTC, of course. So that's going to be our entry order. But we can actually build out our entire order right here. We can build out our entry, stop loss, and target in a single bracket on ThinkorSwim. So what I'm going to do is change the advanced order type from single order to first triggers OCO. All right. Then once I do that, I can right click on my entry order, say create opposite order. Now I have an entry and I have a stop loss or target, but now I need another one. So if I right click on that sell order, create duplicate order, now I have an entry, a stop loss, and a target order, but I have to modify those. All right. So our entry order is always going to be a limit order. Our stop loss is always going to be a market order. And then our target is always going to be a limit order, but we are going to actually change those parameters. So the limit is going to change to a mark. We can do this at this point. And then I like to give the market maker 2 cents. All right. So that just gets me out of my trade in a little more reasonable of a price. I kind of beat everyone that's trying to get the mid price. So what the mark does is that whenever we hit our target price, it's going to put on a limit order in the middle of the bid-ask spread minus 2 pennies. So I'm going to beat everyone that's in the middle. That's why I do that for my target order. All right. So once you have things set up like this, what you're going to want to do is actually save this template so you don't have to go through this manually and do this every single time. So if I go down here to this button, Save Custom Order Template, I click that, name it something, OCO options or something like that, and then save that. Now that'll be in there for you. All right. So I already have it saved. So now what I can do is that instead of just left clicking on the ask, I'm going to right click on the ask. I'm going to go down to Buy Custom. And then I have this custom order down here, SET, Stop Entry Target Options, Order Cancels Order. Boom. That's the type of order that I have set up there now. So now I have an entry, a stop loss, and a target. I just have to put in the parameters for that. All right. I'm only trading 1 contract in this case here to meet my risk parameters. Then if I go over to the right, I can set the order conditions. Okay. So I'm going to left click on that cog. This is going to be my entry order conditions. I'm going to go down to the conditions tab, left click under symbol. It's going to populate GLD. Left click under method. It's going to default on mark. Mark is good. the trigger is going to be less than or equal to our entry price since we are trading in demand in an uptrend. So my entry price was 159.74, all right? So that looks good. It's going to trigger this limit order at 159.74. I also want some cancel conditions as well, though, because there are things that can happen. There are gaps that can happen in the market. What if I don't get filled on this trade today? All right, so what I'm going to do is say cancel this trade if price is less than or equal to either your stop loss or your distal line, whatever you want to do. I'll do my stop loss in this case here. So 158.13 was my stop. All right. And then, so now if I don't get filled on this today, and then tomorrow the market gaps over our zone, it'll just cancel this order out. I won't get a bad fill on a trade I don't want to be in. All right, there are additional parameters that we could add in here for cancel orders, such as if the trade leaves without us. So if I go break the new swing high, if like we caught somewhere, we didn't get filled on this, and it continues that uptrend without us, we also want the order to be canceled at that point. All right, so find out where the swing high is, and then you could go and put a cancel condition out there as well. In this case, we'll just leave it as cancel if it gaps over my stop loss here. All right. The last thing I'm going to do here on my entry order is that I want the limit linked to mark. All right, so go down, hit mark. Now we have a real trade set out, because now once we hit our entry value of 159, once the underlying hits our 159.74, it's going to trigger this order to put on a limit order in the middle of the bid-ask spread of this option. All right, so we're going to get an optimal sort of fill at that point. So that looks good. Hit save. Now we have to set up our stop loss and target. So again, go down to the cog on your stop loss here. This one's my stop loss, and this is my market order. And I'm going to say submit this when I'm at or below my stop loss value of 158.13. All right, that's all we got to do. And on this one here, boom, hit save. Now for our target, we have to modify the price of that. We already have the mark value and giving the market maker built out. We just have to put our target value down here now. So GLD mark value greater than or equal to our target value. So make sure you're correct with your triggers, greater than or equal to, less than or equal to. Just make sure you have that right based on which direction you are trading. My target was 169.37. Boom. I got that in there. I hit save. Now the trade is built. All right. I have an entry, target, and stop loss. This first order, my entry order, is going to trigger my OCO. Either my stop loss is going to get triggered or my target is going to get triggered. It's going to cancel out whatever one doesn't get triggered first. Everything looks good. You hit confirm and send. Now you have a confirmation screen. Just make sure that everything looks good at this point. All right, so just double check your work. But fundamentally, that's how you do it. Hit send, and then you would have an order out there on the market waiting to get filled, and you are protected in this just like you were trading stock or something of that nature. All right, so that's how you go through I'm not going to put this one on, but that's how you go through the scan, the charting, the order entry, all in ThinkorSwim, okay? And this is how I've been trading options for the last couple months. It's been going really well. I created this really nice template. For my trades. And what I would do here is that I would go down in this spreadsheet and actually put out all that information. All right, so I put my setup date down here that I set up the trades on, and then the symbol, the expiration date. It'll tell me how many days I have left till expiration, which is really nice because it's kind of hard to track this stuff in ThinkorSwim. The strike price, the side I'm on, call or put, the quantity, the capital requirements to get in, and then my stop entry target values, the time frame I'm trading on, because I want to make sure that I'm managing my trades correctly. All right, I always manage a trade on the time frame that I took the trade on, and then the status of that trade, either pending, filled, or canceled. All right, and then once that trade is filled and you hit your target or you hit your stop loss, put in that value, put in your notes over here, and everything has been working out really well. So I'll put this template in here up towards the top of this. It'll track everything for you guys. It'll track your total PL. It'll track your rate of return based on your account size. So modify your account size, starting with a $10,000 account in this case, and everything else that you need to know or would want to know in the case of trading like this. All right, this has been really good for me because it's kind of hands-off sort of trading. I set it up the night before. Either it cancels out right away or I get filled on something. If I get filled on something, I'll typically check my positions once per day. If there's a place to move my stop loss to that makes sense, either a new swing point in the market or a supply or demand zone that I can protect, I will do that. Otherwise, I just kind of let things run, and it's been working really well. So that's how you do it. I hope that you guys enjoyed this video, got a lot out of it. If you have any questions, just don't feel free to reach out. I can answer any questions about this, but I just wanted to create this so this was out there. So if you guys want to trade like this, you can. All right. Thank you guys so much. We will